right, good afternoon, good afternoon. Happy Tuesday. Welcome back to Tips from Elaine's Desk. Elaine Proby here, CEO of Proby's Tax and Accounting and Tips from Elaine's Desk. All right, guys. So we're going to be talking about a subject that, I very rarely speak on, and it is maximizing tax deductions. Since, of course, this is a tax deadline coming up on Friday the 15th, we want to get some of these deductions in case some of you haven't even thought about them. So we're going to talk about some steps and ways that you can maximize some of these tax deductions so you can be a lot more prepared. All right. I'm not seeing what that is, Reese, but you can put it in the chat. All right. So, yeah, put what you're telling me in the chat because I won't be able to see the text right now. Okay, guys. So we want to jump into 3 ways to maximize your tax deductions. Again, like I was saying, tax deadline for your partnership and your S corporation is due on Friday. And so by you putting all this stuff together, you can have some things that you could do in order to maximize these deductions. All right. So we ready to jump into this? I'm not sure. I'm seeing myself. Sharice, let me know if we're good to go. Let me know if we're good to go. She rise? So I'm trying to make sure that we're live and we're on and you guys can really see because I'm not seeing myself. I don't know what we got going on. All right, are we good? She rise?
It's frozen right now. That's what I was trying to send you a message on. It's frozen. You were frozen, but I can see you now. Go ahead.
We good now?
Yes, you're good. Go ahead.
Okay, all right. We're good now, guys. Again, we're talking about 3 ways to maximize tax deduction. I was saying that on the 15th here is a tax deadline for those of you who have to file S corporations and partnerships, and you can take advantage of some of these tax deductions. And it can also work for those of you who are self-employed as well, whose taxes are due on October 15. Okay, so we can talk about these tax deductions now. Make some notes, guys. Hit like and share on this video. And we're going to jump right into this without further ado. And the first point today that I want to make is industry-specific deductions. Now, and the reason why I like this one is because a lot of us don't know and is not aware that there are certain deductions that you can take based on the industry that you're in, and others can't just take those deductions. So it's not across the board. So there's deductions that's specific to your industry. For instance, if you're in the medical field, if you're a nurse, if you're in that medical field, there are deductions that you can take as opposed to someone else that's in some other type of professional, right? So things that you can take, let's say, for instance, you're in the medical field, you're a nurse, you're working anywhere in that medical department, you can take your uniform deductions. And one of the things that I know a lot of you guys probably miss specifically in that medical field, if that's where you're working, guys, you can take deduction for insurance. A lot of us have like malpractice insurance and some other type of liability insurance that you may want to take out. And I think a lot of folks may miss that deduction, but you can go ahead and take deductions for paying for malpractice, paying for liability insurance, covering yourself in case something happened. Now, do you always have other insurance on the job or wherever you're at or in your business? However, it's good to have all types of additional insurance in case something does happen. So there's insurance like that that's specific to that industry and any other professional industry that can use malpractice as well. And then, of course, some of us thinks that we can all write off uniforms or write off or clothes or professional attire as a uniform. And I get this all the time. It is not specific to your professional business unless, of course, it's considered a uniform with the name and the emblem and all that on it. I always get this. People in the professional world say, I got to get a suit because I got to go to this mixer. I got to go to this meeting. Can I write that off? Well, that's not a uniform. If you're in one of those industry specific business where you write off a uniform, where it becomes a part of what you have to use on the daily, is required. These are the kind of things that you can deduct. But if you are in the professional field, the suits and all that stuff, but they say if you could wear it out to an event, to an affair, to a party, to a club, it is not considered a uniform. No, you can't write that off. So those things that are specific to your industry, you can write off. If you're in, let's say, the real estate business, guys, now, whenever you travel, for instance, if you're out researching properties, doing market research and development and all this other good stuff, that you can write off because, again, it is specific to what it is that you do. So I take it that this is frozen again, right? She Rise, are we frozen again? Is that what's going on here? Hello, hello.
Yes, you're
Okay, so
frozen. Yes, unfortunately, you're frozen. So I'm gonna be putting this up whenever you're frozen,
okay,
just
just
so
keep
that
the
we can
picture
have
there. But
something up. Yes.
yeah, as long as everything is clear, that is perfectly fine. So yeah, so if you are in, let's say, the real estate profession, again, once again, like a lot of people, right? They can go different places. You can travel right off all the airfare, right off hotel stay, right off all that meals, and you can write all this expense off for going out and researching property, different places, different city, different state. These are deductions that's specific to what you are doing that you can deduct. So this is what we mean by industry specific deduction. Again, same goes for people who are in the entertainment industry. If you're in the entertainment industry, now if you are on stage, you have different attire that is considered your stage attire, you can write that off as opposed to, say, me writing off a suit. That doesn't work. But of course, all your wardrobe attire that you use for your stage presence, for all of your shows and entertainment or acting, whatever that is a deduction specifically for your industry. Now, if you bought a suit, let's say for instance, and it is required for you to do a show, if it's required for you to do a reading for a part, that is okay. You can deduct that, but I can't deduct my suit if I'm just going to do a speaking engagement. It doesn't quite work the same. Okay. So this is what we mean by industry specific deductions. Okay, guys. So pay careful attention to this. There's a lot of things that I think people just miss when they come to do their taxes, or the businesses, they don't capture these deductions simply because they're not aware that these are specific things that they can take according to what industry they are in. All right. And I want to point out one other thing here. And this again is serious because people that are, let's say you're in the manufacturing business, right? And then you are researching things that you have to do in order to, let's say, energy saving type of equipment that you need to have within that manufacturing business. These are things that are specific to what it is that you do. Of course, it's a deduction. So many people call me, so many people ask me, I don't know what to write off. I don't know the things that I need to take. And again, based on what industry you're in, based on what your business is, guys, different deductions will apply to you. So it's very important that you want to make sure that you know what these things are. So when you present your information to get your taxes prepared, you account for all of these different things. And so you can get those deductions. Again, what happened? The more deductions you have, the more you save on your taxes. Okay. So that's the first point today, ways to maximize your tax deductions. The first one is the industry specific deduction. Know what industry you're in and what deductions you're allowed to take. Right. So when all else fails, I tell my clients, just give me everything, and then I figure out which ones that you're allowed to take and which ones you're not. So at the end of the day, if you're not certain of what that is, turn everything in, recap all your deductions, and whatever applied to your industry, whatever applied to you personally is what we will take on your tax returns. All right. So let me say hi to folks who jumped on here. Laverne Smith, hi sis. Thanks for jumping in. All right. Okay, beautiful Rod Smith. Thanks for jumping on here. Those of you who's out there watching this, guys, hit like and share on this video. All right. And again, we're speaking of this topic, taxes, ways to maximize. We always want to know how we can save. And this is a question every single day. How can I save on my taxes? Second point today, we want to get into, and this is very, very important, and this is tax credits and incentives. Now, one thing that a lot of folks is not aware of, tax credits, guys, and let me try to explain this. Your tax credit reduces your tax liability dollar for dollar. It's not the same as a deduction. It's better than a deduction. Right? A deduction reduces your taxable income, but a tax credit reduces the tax liability. So for instance, if you owe $5,000 in taxes and you are able to take one of these tax credits, which I'll mention shortly, and let's say that tax credit is $1,000, then you only owe $4,000. So a tax credit is better than a deduction. And one of the things you want to make sure that you take advantage of every single tax credit and incentive that you could possibly take. Okay, so let's jump right into this and explain what some of these tax credits are. Norman Strand, hello. Thanks for jumping on. Lorna Smith, thanks for jumping. Are you freezing? Yes, she said. So does she have a picture? She have just a picture on there because I think on the live it's freezing. Is it just me? So learn that she kept saying that the picture is frozen. So when that happens, I guess she'll just put my picture on there. So it's not a black screen. I'm not sure what's going on there. However, let's jump into what some of those tax credits are. All right, super important. Tax credit. There's like the clean energy tax credit, and a lot of people who are in the manufacturing business, people who are into that type of business, once you get a clean air energy credit, which is $1 for dollar right against your tax liability. I love this one, work opportunity credit. When you hire people that are disadvantaged, you can get credit for hiring people who are disadvantaged, guys. You can get general business credits, investment credits, credit for hiring people that are veterans, people that, Indian employment. You can get credit for all this stuff. Renewable energy credit, employer health insurance credit. You get credit for having employer health insurance. You can get credit for paying family leave for people who work for you. So you want to really focus on the credits. Again, it's the best thing on your taxes because it's $1 for dollar reduction of that tax liability. Unlike your tax deductions, which only reduces your taxable income, and then you pay taxes, okay, on the difference of that income. So I know it's a little bit complex, but I think it's the best thing ever. And on a personal level, this is why we're always looking for credits on the personal side. We're looking for the earned income credit, right? We're always looking for that. We're looking for the child tax credit on the personal tax return, because those things, some of these credits are refundable. You get that money back, even if you didn't pay anything into the system. It immediately reduces your tax liability. So on a personal side, the earned income credit, the education credit, the child tax credit, we want to take advantage of those things as well, on the personal side and on the business side. Just beautiful, guys. So credit is super important, and make sure you take advantage of all of the credits that's out there that you're eligible for. All right. That's my second point today, guys. We are speaking of 3 ways to maximize your tax deductions and save on your taxes. Again, this is what we want to do. We want to make money, but we just don't want to pay it all back to the government. And I have people calling me and saying, well, I'm getting a bonus of $50,000. I want to know what I need to do, so I just don't take home $25,000 of it, and 50% goes to the government. So we want to know what are the things that we can do in order to avoid that from happening. Okay, so that's what we're having this conversation. Let's move on to the third point, guys. This one right here, most people don't do, because we're always, I think, operating from behind. There's so much to do on a daily basis, and we're always running behind. But we need to plan for the future. We need to be proactive in terms of our tax planning. This is super essential. We need to get ahead of the game. So a lot of us, when we realize that it's time to do taxes, we already passed the year. We're already in January. We're already in February. We're already past the December 31st deadline. There's nothing that we can do in that year that will affect our taxes that we can save. So we need, there's only one thing that definitely you could do after. Let's say, let me take that back. It is if you make a contribution to, let's say, a retirement plan, you have up to the date of filing to do that. But when it comes to writing off other expense deduction, when it comes to making things like contributions and stuff like that you can deduct on your taxes, when it comes to maybe making purchases of items that you need, maybe your business need to buy a new printer, maybe you need to get a new computer. These are things that you need to do within the year of that tax year that you're looking at. So you need to plan ahead, plan for the future. You need to sit down with your tax professional in advance, guys, before the year is ended. You need to sit down and try to determine what are some of the new tax law changes, what are some of the deductions I can take. Can I make a contribution to the employee health savings account, or should I make a contribution or major contribution to a nonprofit organization? These are things that you need to do in advance, okay? So it's very important. Get with a tax professional, get with someone who can advise you before the year's out. The year is flying, and we always get to the end, and when we enter the new year, it's a cash basis situation. You can't do some of these things in the new year for the past year, okay? So let's plan for the future. Let's try to get ahead of the game. Let's try to make sure that we save on our taxes by being proactive. this is what we all have to do because it's so essential. And a lot of times, I know it's hard to kind of do that and stay up with the times, but let's do that, guys, because this will help. I have clients who definitely make appointments before the year's out. They want an appointment in October and November to know what it is that they need to do for the year before it closes out in order to save on their taxes. And there's stuff that you can do, strategies that you can take in order to do that, guys. So let's take advantage of these things, okay? We don't want, again, to make that money and pay it all back in taxes. All right, so those are my 3 points today, guys. Hit like and share on this video. 3 ways to maximize your tax deduction. I'm going to recap this, and I guess this is all frozen again, and this is going and coming. I don't know what that is. I love looking at myself, but let's recap this stuff. The first point today was industry-specific deductions. I love this one because based on what your industry is, there are certain deductions that you can take that the other person cannot take. So it's not everything the same across the board, and you need to know what those deductions are. So that's the first one, industry-specific deductions. Second point is tax credits and incentives. Super, super, super important. From a personal perspective, we're looking for all these tax credit, child tax credit, earned income credit. We're looking for education credit, all these credits because it reduces your tax dollars, dollar for dollar, and or it's refundable. You get refundable credit. If you guys put on a new energy savings equipment on your new home, you get a credit for that also. That is an excellent credit as well, guys. Energy efficiency for your home. This is great credit. So again, tax credit is number one, I'd say, before even the deductions. It's more important, okay? Third point, plan for the future. Can't express this enough. Let's get ahead of the 8 ball, as I call it. Let's plan ahead. Once you get into the new year, there's not that much you could do about the old year. Whatever happened there, you have to, suffer the consequences and pay those taxes. If there's something you could have done and you didn't do it in that year because it is on a calendar basis that you're reporting your taxes, then you no longer could do it in that year. You have to do it going forward. So let's plan for the future. Let's stay proactive. And let's take advantage of things that we can do in order to save our taxes. And guys, I want to challenge everybody this year to do that. When it comes to October and November, recap everything you got going on and see if you need to make some more deduction to charity or something like that. And if you want to make any major purchase for your business, let's take advantage of that so you can write off those things in the current year, okay? All right, so that is my 3 points today again. So let me just go back to the matter at hand. One of the reasons why we seriously is discussing this today is because if you have a S corporation or a partnership, guys, and you file an extension, if you haven't filed those taxes, it is due on September the 15th. Now, the problem with not filing your S corporation, your partnership return on time, those penalties are super, super, super high because you will be fined for every partner that's within that partnership or in that S corporation for every single day or month that you are late filing those returns. And that can go up to thousands of dollars per person. So just think you have a partnership and 5 of you guys are involved, okay? And it's $2,200 or $2,500, whatever that number is per person. The longer you take to file that return, that's just penalty. That has nothing to do with the income taxes that's going to create from the profits of that business, okay? So this is why it's very essential to get your S corporation and partnership return filed on time, okay? Don't say I didn't tell you guys this. The penalty is very steep. All right, so I think with that said, if you need to get those taxes done, guys, go to probystax.com. We have a calendar there. We have a secure website. You can upload your information and you can try to get those taxes filed by the 15th, or give us a call at 323-290-9034. We have a few more days to do this, and I'd hate to see anyone pay those kinds of penalties, okay? Now, if for any reason you didn't get it done in time, do it as soon as possible because that penalty accumulates by the month. So the longer you take, the more you pay, okay? So if for some reason you missed that date, make sure that you get it in there as soon as possible and do it anyway. Some people's like, oh, no, I already missed it. I'll do it now. Don't do that because it will multiply and then you will be sorry that you did, okay? So once again, call Proby Tax and Accounting, guys, and get this done. We can do it no matter where you are. You do not have to come into the office. You can do it virtually in the comfort of your home office. So join me back here on Thursday. What are we going to be talking about on Thursday? Oh, yes. And, before I leave, I always want to remind you guys to go to elainesays.com, and we have a blog there that tells you a lot of great information on businesses and what it is that you need to do and how to get started and how to take it to the next level. And a lot of good stuff is on there. We have a blog post that comes out once a week as well. So go to elainesays.com. Okay, make sure you guys visit that page and share it. So this Thursday, we're going to talk about embracing risk and risk taking and adapting to entrepreneurial mindset. Now, a lot of folks and a lot of people that I've spoken to lately are into the retirement mode. These folks are thinking of what is the next thing I need to do to keep me busy. Some of them want to start a business. Some of them have started businesses. They never really put much time into it because they were at work. So now they're asking me, what do I do? Can I maintain this business? I had this cleaning services I set up 2 years ago. What do I need to do, or do I close it down? And they want to have something to do. So I love this one because to get that entrepreneurial mindset, if you haven't already in that mode or you've been thinking about it all this time, especially for those of you who's retired now and really want to stay busy, this is a good time to listen into this so you can get into that mindset and get that business going. I've encouraged a lot of folks in the last few weeks to do just that and or to continue to pursue their passion because they have retired from that job they did for 30 years. Now they want something else to do. And they want to stay busy, and they want to also be making a second source of income so they could run around the world. So let's talk about this, guys. And those of you who are in your business now, let's take it to the next level and make some more money. Okay. All right. So I think that's it for me today. All right. But Lerna says, I'll refuse. Okay. That was what she said earlier. So with that said, guys, I'll see you guys back here on Thursday at 1 p.m. Hopefully we don't have all this freezing. I don't know what that's all about. But Thursday, I'll see you guys back here at 1 p.m. So you guys have a wonderful rest of your Tuesday afternoon. And with that said, I want you guys to take care of each other and take care of yourself. See you later. Thanks. Bye-bye.